Ladies and gentlemen, good day and welcome to Maharashtra Seamless Q2 FY23 earnings conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikas Singh from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Good afternoon, everyone. On behalf of PhillipCapital and Maharashtra Seamless, I welcome all of you on Q2 FY23 earnings conference call. Today, from the management side, we have with us Mr. D.P. Jindal, Chairman, Mr. Saket Jindal, Managing Director, and Mr. Kaushal Bengani, Senior Manager, Investor Relations. Without taking any much time, I would hand over the floor to Mr. Kaushal Bengani for opening remarks. Kaushal, over to you.
Thank you, Vikas. Good afternoon, shareholders. We are pleased to have this call with you and thank you for joining us. We hope you have been able to go through our recent announcements, results and earnings presentations. Keeping in view the upcoming festive holidays, we have put tremendous effort in declaring our quarterly results within 17 days. Our performance in the previous quarter improved substantially. On year-on-year basis, revenue and profit increased 46% and 86% respectively. Quarter-on-quarter basis, revenue and profit increased by 6% and 15% respectively. In the previous quarter, Maharashtra Seamless has supplied two key value addition products, Tower Service Subsea Seamless Pipes and Drill Pipes, and more orders are expected. As domestic market for subsea pipes is around 70,000 tons and the market for drill pipes is 12,000 tons. We expect more orders to be received by us. In United Seamless, cylinder pipes and export market comprise 60% of total dispatches, leading to extraordinary margins. As communicated in our earlier calls, we have also announced a bonus issue of 1:1 and have prepaid long-term debt of rupees 300 crores. We have also provided an update on capital expenditure, which we will comment shortly. This is in line with our continuous efforts to improve operations and improve our participation in value addition segments. I would like to quickly take you through the presentation now. The first few slides detail the operational performance of the company and of United Seamless. Our profit after tax has increased by 86% in Maharashtra Seamless and has really ramped up in United Seamless, primarily because of increase in dispatches. On quarter-on-quarter basis, we've also done well, keeping in view the buoyant market and our market leadership position. United Seamless is currently doing really well, and the company has filed an application with NCLT Mumbai for amalgamation of United Seamless with Maharashtra Seamless. We are being advised by Pricewaterhouse in this regard, and we expect this amalgamation to be concluded within this financial year. The next slide talks about the operational and financial performance of Maharashtra Seamless and United Seamless. EBITDA margins have remained consistent in Maharashtra Seamless. However, in the ERW segment, we faced a slight dip on account of change in the products which were dispatched during the quarter. In United Seamless, EBITDA margins has gone up primarily due to the exposure in value addition segments and certain very high value export orders being dispatched. Our exposure in unquoted equity and preference shares and ICDs have remained consistent in the past 6 months. Specifically, ICDs have come down from 144 crores to 102 crores. Our liquid investments in the previous quarter have increased by 300 crores. This is on account of reduction in working capital and improved operations. Because of an increase in liquid investments in the previous quarter, we've become net debt negative to the extent of 334 crores. On account of this liquidity position, we've prepaid loan of 315 crores, which was also communicated in our earlier investor calls. There is only one long-term debt in Maharashtra Seamless, which is for the rig and which is backed by cash flows in USD. Corporate guarantee and SBLCs are reducing as per our committed schedule, and we expect this entire exposure in corporate guarantees and SBLC to reduce fully by September of 2024. The next slide talks about capital allocation in core business. We are focused exclusively towards the core segment, and we want to increase our participation in high value addition segments. We've given a capital allocation update of 852 crores at various locations of the company, out of which 43 crores is normal replacement expenditure, and the rest 800 crores is towards capital expenditure, which will help us in improving our market position. As capacity utilization of Maharashtra Seamless and United Seamless will increase, we will also have increased working capital requirements of 550 crores in both companies. Thereafter, we are also exploring opportunities for drill pipes, ID coating, premium joints, and even a new ERW API pipe mill. Our order book remains very strong. Usually our order book would be around 1,000 crores. However, it is at 1,780 crores, which is indicative of good sustainable demand, and we expect this order book position to continue for entire FY23 and going forward as well. The export orders are still coming in, and our exposure to the export segment on consolidated basis is around 35%. We've also put out our dispatch targets and margin outlook and our performance in the past 6 months. On the dispatch front, we have slightly revised our bifurcation of seamless dispatch between Maharashtra Seamless and United Seamless. The target has been revised from 350,000 tons to 365,000 tons in Maharashtra Seamless, and from 120,000 to 105,000 tons in United Seamless. This is because in United Seamless we are making high value addition pipes, which take more time to manufacture, but which leads to a lower quantity dispatch but generate much higher margins. We've talked about the government policies and the sales and marketing update on Maharashtra Seamless and United Seamless in the subsequent slides. We've listed out the places from where we are expecting orders to come in, and I will urge all participants and the wider investor community to especially go through the last 3 slides of the presentation so that they will get a better idea about the market and the way the company is positioned in the market. Rig counts are still at high levels, and on account of the underinvestment in the oil and gas sector over the past decade, crude oil trajectory is still upward. Further, since the US has made consistent draws from its strategic petroleum reserve in order to contain the rise in crude oil prices, we expect that further draws will not happen as the strategic petroleum reserve is at a very low level. India's oil demand is also projected to rise 50% in 50% from the current levels of around 6 to 7 million barrels per day to 7.2 million barrels. The gas demand is also expected to rise going forward. On the shareholding structure of the company, we've had new institutional investors participating in investment in Maharashtra Seamless. Further, there has been a sustained increase in promoter holding, as also a sustained increase in the holdings of DIIs and SIIs. I will now go back to Vikas and open the floor for questions.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bhavan Cheda from Enam Holdings. Please go ahead.
Yeah, good afternoon, sir. Congrats on record results and continuous reduction to non-core business and continuous debt reduction also. So few questions. First, on the capex plans of this 850 odd crores, this is a big number which we are planning over next 3 years. And if I see the breakup, this 350 crores is for hot mill upgrade. So, and I think you have given the estimated turnover increase overall from this capex of close to 1900 odd crores. So can you elaborate more the need for this big capex of 850 crores, whether there would be increase in capacity also, or it will lead to a more value-added products, and what kind of value addition would be there which will require this big capex?
Yeah, it is in Nagothana 14-inch mill. This mill design is very old, and after that lot of technological development is there. Like, okay, we have Hyderabad United Seamless, which is latest one. So at one time we have to replace one of the machine in 14-inch mill. Okay. That is, we call it PQF or MPM mill.
Sure.
And that is a capital intensive.
So this would be the replacement of existing mill. It won't lead to additional capacity, Mr. Jindal?
Certainly it will add some capacity.
Okay.
Because the new mill will be faster.
Right.
Yeah. And of course the better quality and better yield.
Sure. So, very well understood, sir. Obviously, it's an upgradation of mill. And except for this, I think there are some other items like cold drawn pipes and OCTG line. So, all this will help only in leading to additional value-added products, right, sir?
That's right. But in Narkatpalli, if we add additional line, then we can run more of hot mill. At present, we are running only one shift because we have a constraint of finishing the pipe.
Sure. And so after completion of this capital expenditure, probably over next 2 to 3 years, in Maharashtra Seamless, can we deliver 500,000 of Seamless and another 2 lakhs at United Seamless? So basically we are looking at say 0.7 million tons of Seamless, including some portion of value added in over 3-4 years?
Yeah, around that.
Around that. And in that, according to you, sir, value added would be how much if we deliver volumes of say 7 lakh tons after this capex in 3 to 4 years? How much would be value added in that, sir?
Value added means we are already having value added product.
That will increase, no, sir?
That
Yeah.
or the additional?
Additional value. So overall value added portion in that 7 lakh volumes would be how much, sir?
Around 2 lakh tons.
Around 2 lakh tons. Okay. Thank you, sir, and best of luck. Yeah. Thank you.
Thank you. The next question is from the line of Pratiksha Daftari from Equitas Investment Consultancy. Please go ahead.
Good evening, sir. Thank you for the opportunity. Just wanted to understand if you could elaborate on the timelines on this capex plan. That what capex are we going to undertake first, or is it going to go simultaneously, and when do we expect completion of this?
We'll undertake the capex plan over a period of 2 to 3 years. The two projects which will get priority is heat treatment and finishing facilities at United Seamless, so that we can immediately ramp up our capacity utilization. The second project would be the cold drawn pipe mill, which we want to set up in Mangaon.
Okay. And this USTPL finishing line would take how much time approximately?
Once it starts, it will take 1 year to complete.
Okay.
And we've already started certain portion.
Started placing orders.
And we've identified vendors, and we are in the process of obtaining inquiries and placing orders.
Okay, understood. And with regards to ARW, our profitability was particularly low in this quarter. So what were the reasons for the same, and how do we look at profitability going ahead?
In the ERW segment, we've not done very well as compared to the previous quarter. This is on account of a different ERW product which was manufactured. So we are making products for the non-oil sector which have low margin. Going forward, we expect to gradually move away from non-oil sector to oil sector.
Okay, so going ahead in our order book, the non-oil segment would be how much percent, if it's possible to?
Usually it's, I think, 50-50. So oil sector is 50% and non-oil is 50%.
Okay. And profitability for USTPL again improved quite a bit in this quarter. So do we expect this profitability to sustain given the value-added segment in the order book, composition of the order book?
Means the production will sustain, and the value-added, the last quarter was higher because of cylinder pipe and export. So this was a little on the higher side, so it will correct itself to the usual level of 18,000 to 20,000.
Understood. Okay. That's it from my side. Thanks a lot.
Thank you. The next question is from the line of Darshil Pandya from Fintrust Capital. Please go ahead.
Hello, sir. Congratulations on the good number. Hello?
Yeah.
Is the voice audible, sir?
Yes, we can hear you, Darshil.
Yes, sir. So I precisely have two questions. So the first one is I would like to, understand how you see for, H2, that is the second half of this fiscal, how you see the demand. And the second question is for the, which we saw, that is a liquid investment. So the liquid mutual fund schemes which we have invested, So the numbers have gone up very high. It is probably up 10x. So what do you think of this amount? Is this for working capital, or is this something for prepaying the debt or something? If you can please give me an idea.
So I think the next 6 months, we are expecting to maintain the profitability and the production levels. And there is a good demand. And also in export, the Canadian market has opened up. And in US, we are maintaining our exports. So export is promising. Plus, in domestic, the oil sector, especially as we mentioned, the subsea pipelines and also the demand for cylinder pipes. So all that will remain. So we are expecting to maintain the results EBITDA in the next 6 months. And second question was the mutual fund. So we have funds extra, which, as we just mentioned, can be deployed either in capex or any other diversification if we come across in the near future.
All right. And sir, any specific guidance as to how what growth you are seeing for the next half year?
Means we are maintaining this same growth what we are doing currently. So it is means the first 6 months will at least repeat, I think.
Okay, fair enough, sir. And as you have mentioned that the seamless merger will be completed by this fiscal, right?
Right. So we are expecting as soon as possible the NCLT merger approval to come, but we are still there's some delay from NCLT which we are trying to pursue.
Right, sir. That's all. That's all question I wanted to ask, sir. Thank you so much for the question, and congratulations on the good numbers, sir. Looking forward to see you in the next quarter. Thank you.
Thank you. The next question is from the line of Chetan Doshi, an individual investor. Please go ahead.
Congratulations for the good set of numbers. Sir, I would like to ask you one very specific question. You have introduced some new pipes for, I think, ONGC, deep drilling into the sea. So what the market means, how the performance of the products what we have supplied to them, what is the feedback from the customer, and how we are planning to get this product line increase in coming days?
So this is the drill pipe which we are manufacturing in the Mangaon facility, and we already supplied to other customers in the past, and it was accepted, the quality. And we have API license for this product. So there is no problem in the quality so far, and we are adding one more line of this drill pipe to cater to the additional demand. So it's a high value added product, and additional capacity will help in meeting the demand.
So what kind of order inflow we expect in next 2 quarters in this product segment?
We expect 3 more tenders to be awarded to us by ONGC and Oil India for drill pipes.
Thank you very much. That was a very specific question, and there is no competition in this product line, right?
From India.
There is no competition.
Yeah, in India. In India, there is no competition from any manufacturer.
That is right.
Yeah. Thank you very much. That is
There is a competition. Jindal Saw is also doing drill pipes.
No, we mean there are 2 products. One is drill pipe. Drill pipe Jindal Saw is also making, but subsea pipeline there is no competition.
Thank you, sir.
Thank you. The next question is from the line of Rohit Suresh from Samatva Investments. Please go ahead.
Good evening, sir. Thank you for the opportunity.
I just wanted to know how is the demand for the API line pipes and how do you see the demand going forward in H2?
In the seamless or ERW?
ERW.
Yeah. So in ERW, there is a constant demand, and IOCL and other customers, there is always a requirement, and there are a lot of tenders expected, and we have many many players in India who are catering to this requirement. So means there is no shortfall of orders in this area.
Got it. And sir, in the ERW segment, would API line pipes be one of the highest margin products, if I'm not wrong?
Yeah. So in the ERW, the API category is higher margin than the IS product.
Great. Thank you so much, sir, and wishing you all the very best. Thank you.
Thank you.
Thank you. The next question is from the line of Hetal Gada from ITI Mutual Fund. Please go ahead.
Hello, sir. Good evening. I just wanted to ask a couple of questions. Firstly, on the ERW pipe performance. Sir, even though our the pipes are required in the water segment, the EBITDA per ton is not as low as 1,000 rupees. So can you please throw some light on what happened in this quarter and why did the EBITDA per ton decline so much in the ERW segment?
There was a testing of the pipe where there was more time taken in the testing.
Okay.
So we lost time in the testing and production was less. So because of less production, the means cost being higher, there was less profit.
There was? Sorry, I did not get your last part.
The production was less and the cost was higher. So
Okay.
the profit was low.
So you mean to say the operating leverage was not available and that impacted, but so even then there is a huge decline. Was there any inventory drawdown or high cost raw material which impacted the numbers?
Some inventory impact also because of the highest price steel which was in stock.
So basically, whatever dispatches we can see, that is non-oil sector.
That was non-oil segment. Okay. And?
The oil sector dispatches were very minimum.
So the so on a sustainable basis, or if it is a non-oil segment order, what will be the per ton EBITDA level for those orders? Can you just throw some light on that?
Those are 2,000 rupees a ton in non-oil.
Okay. And for oil?
Oil is higher. 6-7.
Okay.
Maybe more.
Okay. And sir, if it is possible for you, can you please tell me what was the inventory impact on per ton basis for this quarter?
We'll send it to you separately.
Okay, sir. Okay. So secondly, just wanted to understand, for other businesses like your standalone seamless business and United Seamless also, what is the sustainable EBITDA per ton that we can expect going forward?
I didn't get the question.
On a sustainable basis, what will be, any guidance on EBITDA per ton for the seamless segment in both standalone business as well as in United Seamless?
I think 18,000 to 20,000 is the thumb rule for the margin.
Okay. Okay, sir. And sir, one more question I wanted to understand. Like your order book, if I see from Q1 to Q2, it has remained quite high, but there is a decline in value term. I think because there has been a decline in steel prices, that also could have affected. But I just wanted to get a sense from you whether on volume terms, the numbers are on a higher trajectory, or what has impacted the value or order book value?
Right. So order book what has been the impact?
Our order book is at 1,780 crores, which is lower than the previous quarter, but it is still at a very high level. On tonnage basis, it is still much higher than it was at this time previous year.
But from QOQ basis, tonnage basis, I don't want the number, but at least can you directionally say whether it is up or low?
On tonnage basis, it is lower, but that is on account of reduction in our working capital as well.
Okay, fair enough. And so lastly, about the dividend policy, can you throw any light on that? What will be your dividend policy?
Currently, we have already paid the dividend of last year, which was at par value. And we are maintaining that means 100% on the par value. And we also, in this board meeting, we are doing a bonus issue where 1:1 bonus share will be given. That will increase the share capital and number of shares will be doubled. So this would help in the volume of trading, and also overall market cap should also be improving due to this issue.
Okay, so right now you said the dividend policy will be maintained at 100% of the fair value. Did I hear it right?
Yeah, par value.
Okay, fair enough, sir. Thank you so much.
Thank you. The next question is from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. Sir, in our rig business, despite higher day rate, we have made some EBIT losses in the Q2. So can you just explain the reason behind it, and how can you expect in the rest of the 2 quarters, what kind of EBIT margins we can expect there?
In the rig segment, there was forex loss on account of restatement of the USD loan. There was forex loss of around 11 crore rupees in the first quarter and 8 crore rupees in the second quarter. However, if you look at operational profit, then we made around 17 crores of operational profit in the 2 quarters, which is in line with what was projected. The loan taken for the rig is in USD, and cash flows of the rig are also in USD. There will be no cash loss going forward. It is only a notional restatement which we have to do at the end of every quarter.
Okay. And sir, for next 2 quarters, we have strong order book, so production levels can be maintained. But how do you see FY24? Do you see this high order book sustaining in the next year too, and the production levels?
As of now, we expect good orders to continue, and we see no reason why that will change.
Okay, sir. That's it from my side. Thank you very much.
Thank you. The next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Congratulations on good set of numbers. So the 2 questions on my side. One is, in H1, for USPPL, there is around, if I'm not wrong, dispatch of around 44,000 kmt. And you have a target of 105 kmt for the FY23 year. I just want to know, out of 44 kmt, how much percentage goes towards export, and what is the target for export, for the entire year? And second question is, considering coming to the raw material part of it, I just want to know Q1 to Q2 of this year, what is the fall in the prices, or if the prices has been stable? I just want to know the understand the inventory part of it.
In United Seamless, in the first quarter, 50% of the dispatches were towards exports. In the second quarter, 40% of the dispatches were towards exports. And going forward, we expect similar levels for the export market in United Seamless.
Okay.
Regarding raw material, so in the first quarter, on account of imposition of export duty, raw material prices fell, and they have been on the lower side since that point in time.
Okay. That's all from my side. Thank you.
Thank you. The next question is from the line of Vishal Rampuria from Julius Baer. Please go ahead.
Hello, am I audible?
Yes.
So when you spoke about the outlook, you spoke about cylinder pipes. Can you talk about the opportunity in cylinder pipes?
Cylinder pipes are manufactured in United Seamless. This is an import substitution product, and the annual market is around 50 to 60,000 metric tons. We are the only domestic manufacturers of cylinder pipes, and we supply to cylinder manufacturers who use our pipes to sell to companies like Linde and to companies like to companies like Tata Motors, Eicher Motors, and all automobile companies.
So out of 60,000 industry size, how much we are able to cater?
We'll be able. I'll tell you the exact numbers. In the first quarter, 20% of dispatches from United Seamless was towards cylinder pipes. In the second quarter, also 20% of dispatches were towards cylinder pipes. So we expect we'll be able to cater to, let's say, 45% of the market right now.
And how much this number was, say, last year?
Last year it was very high because last year there was a shortage of oxygen cylinders in India on account of coronavirus. So there was an increased demand for cylinder pipes because there was a shortage of oxygen cylinders.
Okay. So my question was largely the fact that because of the surge in the CNG prices, we have seen softening of CNG cylinder demand. So are you also witnessing similar kind of lower demand for the pipes, for the cylinder pipes?
No, that is because in the automobile segment there is also demand for CNG cylinders.
Oh, so right. When I say lower demand, I was largely referring to the auto demand because ultimately it's a spread between the CNG and the diesel prices. So given that CNG is all market linked and diesel is largely frozen, so last few months we have seen lower demand for the CNG vehicles. So in that respect, are you also witnessing any slowdown in demand?
No.
Okay. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Namaskar, sir, and thank you for this opportunity. Sir, firstly, as you mentioned that the margins for USTPL were inordinately high and would get corrected for the next quarter, and also we have also given the dispatch number lower by 22K for USTPL for H2. And as Jindal Sahab has mentioned that we are very likely to maintain the EBITDA number. So how will the math work, sir, when we are anticipating 18,000 per ton margin for USTPL, 20,000 reduction in volume, and we are looking for this, I think so we did 470 crore of EBITDA for H1. And if you could explain, sir, where I am missing the numbers.
Saketji, we have reduced the dispatch target in United Seamless by 15,000 tons. However, we have increased the dispatch target in Maharashtra Seamless by 15,000 tons. So overall, we will dispatch the same number of the same tonnage of seamless pipes.
Correct. But from 30,000 EBITDA per ton, it will go down to 18,000. As Jindal Sahab has said that it will even out, and this was extraordinary number for USTPL. So how will then the bottom line will not be affected? Even though the volume will remain same, the EBITDA numbers will go down.
The EBITDA
Dispatch will not be reduced if we don't make value addition. You see, either of it will reduce. When we are producing the normal product, then the production will be high. Only when we produce cylinder pipe and other value-added product, then only dispatches will be low.
Sir. And on the dispatch point, it is correct. I was only harping on the EBITDA per ton for USTPL, which sir has mentioned that it will go down from 30,000 to 18,000. That is a reduction of 12,000.
That reduction will not be immediate, it will be gradual. And if you look at our achievement in dispatch numbers, so 48% has been achieved in Maharashtra Seamless out of the target in the first 6 months, and 42% has been achieved in United Seamless out of the target in the first 6 months. However, more than 50% of EBITDA has, of the 900 crores of EBITDA guidance which we had given 6 months ago, we've achieved much more than 50%. And since the second half of the financial year is generally better than the first half, we expect that the EBITDA guidance will be met both in terms of we expect the EBITDA guidance to be met and also the dispatch guidance to be met.
Okay, so we are holding on to this for 490 numbers. The 470 has been done for this first half. So if you look at the 490 numbers, we are looking at lower EBITDA. However, the dispatches are going to be higher. 430 is then the ballpark number. So in that case, we should be looking forward for the higher EBITDA ballpark number upward of 900. That understanding is correct, sir?
That is correct.
Sir, then coming to this growth part of the story, sir, if you could give us some more color, what are the pillars that we have? I read your the 3 slides there, but this has also been a cyclical part of the business for us. So we are committing this money, 800 crore, especially for the 1,000 and for the capex part. So if you could explain how likelihood there is likely to be the continuity in demand going ahead, because some type of scenario did played out in 2013-14 also. Correct me there. So we are talking about a recession in the global economy. We are talking about a lot of geopolitical things. So are these things aligned in favor of the demand of pipes? That is what we are concluding. If you could throw some more light on the same, sir. How prudent is our capex that we have planned, because it's a substantial one?
On the capex front, we expect the demand to sustain and the cycle to continue, because in our assessment, the oil cycle turned around in 2014 for a period of 7.5 years. That reversal had started in 2021 and was cemented further by the Russia-Ukraine war. On account of the turbulent geopolitical situation, we expect crude oil prices to remain firm, and we are getting good demand for our pipes. The rig count levels in the US is similar as it was prior to the onset of COVID. And the crude oil price trajectory is still upward. A very good indicator for this is the Strategic Petroleum Reserve, which is at its lowest point in the past 28 years. So we do not expect crude oil to fall, and if crude oil does not fall and rig counts continue to increase, there will be good demand for OCTG products, which is why we have planned our expansion activities.
Basically, these are not increasing much of the quantity, it is value addition. So the demand is already there for these products. So we have to be supplying more quantity in these items. Yeah.
Right. So, the last 2 points. So firstly, for this oil country tubular NCLT proceeding, sir, what is the current update on the same, sir? When can we hear something on it?
I think there was some notice that and they have taken out of NCLT, and the promoter want to revive that unit. Okay. So let's see what happens.
Okay. And then our bid, what is the status of our bid when it gets nullified with the same account being now non-classified as NPA?
Yeah, it was our bid was never opened, and so okay. If they want to go to NCLT, they will call it again.
Correct. And last question to Jinder sir only, sir. Sir, when we look at this creeping acquisition exercise, sir, you very categorically mentioned that buyback being a costlier tax incidence measure. Sir, when the promoters look for creeping acquisition, other than the availability of funds, what are the other factors, sir, that are kept in mind by you people, so that would give us some understanding how are you yourself, being the largest shareholder, valuing this enterprise? But what we have seen, that there has been a steady increase and with market cap, and also steady increase in your creeping acquisition pattern. So now would like to understand, sir, are we done with it, or how are you evaluating it? What is the valuation that you yourself are looking forward? Because it is first the availability of fund and then the valuation. On these two factors only, I think so, you are going ahead, since you have a substantial stake way above 67% now. So if you could throw some light here.
Our target is to go up to 75%. So, and as other shareholders, we are also shareholders. So, same wavelength will go as per the market.
Thank you. The next question is on the line of Bhavan Cheda from Enam Holdings. Please go ahead.
Yes, sir. On ERW pipes business, our capacity is 125,000 tons, but I understand, being an old mill and depending order sizes, we have never reached peak volumes of even 90,000 to 1 lakh tons. So after the current round of capex, what would be the peak potential volumes of ERW pipes?
We expect it to be very close to the stated capacity of 125,000.
Okay. And the second one on the margin outlook for ERW, I missed on that point. So the current quarter was low margins. So what's the outlook for second half, and what would be the normalized margin in ERW pipes going forward?
Could you repeat that again, please?
Yeah, so ERW pipe margins were very low at around 1,000 rupees a ton in this quarter. Historically, they have been higher, but they have remained volatile. So based on current order book, what margins you expect in ERW pipes in second half, and overall over a longer term, what would be your target normalized margin in ERW pipes business?
The ERW has got two segments. One is we can say the ordinary pipe for water purpose and other things. So there the margin is only say 2,000 rupees per ton. And there are other segments, that is oil sector. These pipeline, gas pipelines and oil pipelines. There the margin is 7,000 to 8,000 rupees per ton. So in last quarter we have least supplied to the oil sector because of certain problems. So we have supplied to the general market. So the margins has dropped down. That is the main reason. Otherwise, in future, we would like to maintain 50-50, 50% oil sector and 50% market segment.
Sure, sir. Thank you. Yeah.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Vikas Singh for his closing comments.
Thank you, everyone. On behalf of Phillip Capital, I would like to thank Maharashtra Seamless to give us the opportunity to host the call. And I hand over to the call to Maharashtra Seamless management for any closing comments. Over to you, sir.
We thank the investors and the shareholders for participating in the call. The activism shown by some of the shareholders have been guiding us in taking decisions which have been beneficial for the organization and has also improved our profitability and our position in the market. So we value the contribution that we get from our shareholders, and we want to improve our engagement with them, and we've taken a lot of feedback from shareholders and implemented them. Please connect with us in case of any additional queries, and we thank you again for participating in the call. And I would also like to thank Mr. Jindal Chairman and Mr. Jindal MD for taking time out from their schedule so that we are able to organize this call and communicate with our shareholders. I would also like to thank Mr. Vikas for organizing the call and assisting us in whichever way possible. Thank you, Vikas, and thank you, shareholders.
Thank you. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.